Hello viewers, good evening. After a long time, hello viewers, good evening. After a very long time, I thought of coming up with one short video on even accounting for discount or accounting for cash discount. Accounting for cash discount has takes the two versions. Actually, versions prior to IFRS 15 and after IFRS 15. So there are two versions where we can count the discount. Generally, based on our basic accounting studies, discounts are when especially cash discounts are two types. One is cash discount allowed, other one is cash discount received. So there are two types of discount that we have discussed in the previous studies. One is discount allowed, the other one is discount received. So previous or prior to IFRS 15, how we record the discount allowed and discount received, this basis. You debit discount allowed and you credit the receivables, and that's the double entry. Then what you have debited here as discount allowed, you will be transferring that to the profit and loss account or income statement, and you consider that as expense. On the other hand, when you do receive discounts from your suppliers, what the double entry effectively, you debit payables control account and you credit discount received, and then subsequently what you have recorded as credit, you will transfer that to the profit and loss account. You would consider that as other income. That was a known adjustment. Everyone known, whoever have studied a basic accounting from various streams. Once IFRS 15, accounting for contracts with customers or contracts with customers, or you could also say revenue recognition from contracts with customers. This is what the new accounting standard. This IFRS 15 is a superseding accounting standard. There was a accounting standard known as or named IAS 18. There was an accounting standard IAS 18. This IAS 18 it was the old standard. That standard has been superseded by and then replaced with IFRS 15. IFRS 15 is the revenue recognized contracts with customers, or you could also say contracts with, the precise name I will tell you right now. Yes, how you say that? Revenue recognized with the recognized from the contracts with customers. That's what the correct name. Revenue recognized from the contracts with customers. Now, actually, this standard is a quite a bit large standard, but today my agenda is not to go through the entire inputs of entire technical details of IFRS 15. Rather, I have picked up the accounting treatment proposed by IFRS 15 for discount. And IFRS 15 has named the discount as variable consideration. IFRS 15 has named this type of discount as variable consideration. Alternative name is cash discount. This cash discount, according to IFRS 15, you could classify into two headings. One is customer customer accept the discount or the cash settlement discount at the inception of the sales. This is one possibility. At the time of the sales is taking place, customer is accepting the amount of discount proposed to the customer. That is one option. The second option is customer is not accepting the discount proposed by the business or the entity. So if the customer is accepting this, so if the customer is accepting the proposed discount, then IFRS 15 suggesting to generate an invoice after subtracting the invoice discount amount from the invoice. If you look to take a small illustration or an example, invoice value, if I say $1,000 and the proposed discount amount $100. So the net sales value is $900. So what the IFRS 15 is telling, suppose if the customer is willing to take up such type of discount, invoice at the time, reduce the discount at the time of invoicing, and the customer should be invoiced at $100. Now there could be a contingent scenario where subsequently customer might say, I don't want any type of such discounts. If that happens, subsequent to you have invoiced the customer, then what you then have to do is you need to reverse that amount of discount which has been reduced. That amount of discount which has been reduced and reverse that as a revenue. So now here additionally you have to consider additional revenue of 100. Accordingly, the total revenue in this scenario will be 1000. How? Originally invoice value was 900 and now subsequently 100. So then the total will then reverse to $1,000. This is one method. The second method is actually invoice at full value. So that means if the customer is not willing to take up the discount which has been proposed by the company, then you should invoice the customer at the full value. Meaning in this particular example, the invoice value is $1,000, and as he is not willing to take up the discount, so discount will be 0. Discount is 0 here. So you subtract that and then you get 1000. So the net invoice value will again be 1000. Okay. Again, there is a contingent possibility. Subsequently, customer might be interested in accepting such discount. Then what you should then do, you should reduce that particular amount of discount from the total invoice value. Now the discount value will be in that example is 100. So you should adjust this to the revenue. That means now the revised revenue will become $1,000 minus 100, so 900. This is the quick summary with regard to cash discount, how IFRS 15 is dealing with. And I just thought of uploading this to my YouTube channel, and there will be lot of other types of lecture videos will follow. In order to obtain all of this, please do like my videos, subscribe, and as well as share my videos. Presented by Mohammed Ashik Khan, and thank you very much and good night.